Welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we are tracking at this hour. Markets look for direction on a lackluster day of trade, and the Nifty trades around the 11,300 mark. The metal index is the top sectoral gainer. MCX has gained in today's trading session after market regulator SEBI allowed foreign entities to trade in the commodity derivatives market. And Aditya Birla Group is always open to new acquisitions abroad, provided it fits the core business, says Group Chairman Kumar Mangalam Birla at a Bloomberg India Economic Forum. And the Roads Minister Nitin Gadkari appeals to bankers to extend support to road developers, says doing so will be in the interest of the economy.
All right, it's been a lackluster afternoon, like Agam just highlighted, for the indices. We've not done anything in intraday trade today, still hovering around that 11,272 mark. On opening, you did see a smidge above that mark, but as you can see towards the afternoon started to peter off, and a slight bit of a relief here, but once again back into the red. So absolutely flat for the Nifty as well as for the Sensex. The banks also not doing a whole lot in intraday trade. So you've got cuts coming into specific names, but the overall index is down just about 0.2%. It's going to be interesting to see how we close out for the Bank Nifty because it's the weekly Bank Nifty options expiry, so you're going to be seeing a heavy turnover as well in the futures and options space. A quick glance at what's been happening in the European basket as well, because you've got some cues coming in from there too. So Europe at this juncture seems to be positive. So FTSE, CAC, DAX, all of them trading in the green by a good quarter to about 0.33% apiece for the indices. A quick check on the currency. You did have the rupee strengthen in early morning trade, after which once again some bout of weakness has come back in, and you are seeing 72.66. I think it went to 72.55. From there it's come back down. That's what the currency is doing in intraday trade. A quick look at the heat map to see where we are placed in terms of the individual index movers before I go to Agam, and he takes you through specific stocks in the broader market. So as you can see, the breadth on the Nifty as well since morning session obviously is worsened. You had like 5 or 6 stocks right at the down, at the bottom in the red, but now that seems to have exaggerated a bit. But top gainers from the oil and gas pack were BPCL, GAIL, HPCL, ONGC all stack up amongst your first top 5 gainers. Tata Steel is up 2%, Hero MotoCorp is up 1.8%. You've got the likes of Hindalco from the metals pack, from the banking space, and Axis Bank, Cipla from the pharma space is doing 1/3%. Amongst the bigger losers, you have an IndusInd Bank losing about 2.25%, Z is down about 3%, Yes Bank, Bajaj Finserv, HUL loses some ground, and Reliance Industries again being a heavyweight there, some contribution on the downside causing a drag on the index. But Agam, there are specific movers in the broader market. What do they look like?
Sure. So Devina, we do know that there are more losers as compared to gainers in the broader markets, but I'm going to talk about those which are gaining and bucking the trend. As you can see, we have Muthoot Finance and Sheela Foam, which are advancing, and also the top gainers on the NSE 500 index. However, well, we do also have HDFC AMC, a stock which is trading well above the levels of 1,800 rupees per share just a few weeks ago, is now, well, flirting with levels of around 1,400, and our infra is the other counter which is looking at some amount of weakness. What is also moving down is Stake Solutions, bucking the trend, moving in contrary to a lot of its peers in the industries, declining by around 7% at this point in time. And InfoEdge is finally starting to wilt as well. That was holding on to a certain extent, but it has come off quite substantially, now down around 6.5%. So we'll be watching out for that. But what else are we tracking in terms of the futures and options space, Devina?
Well, it's interesting to see that you've got a level of 11,300, which is the fulcrum of all the attention in today's session. So be it the call action or put action, both of them together concentrated around that mark, which makes you believe that people could be taking spread strategies, a straddle strategy around that mark in hopes of a probable consolidation around this level of 11,300 odd. So just a quick check on the Bank Nifty. A future open interest is moved up sharply, about 17% odd, and you'll probably see a bigger number by the end of trade today. That's on the back of a 0.1% dip on the futures price. A quick snapshot of what the options placement is in terms of the kind of change we've seen. That's the weeks for you. It's down marginally, but that's the open interest distribution that we are seeing. This is where the maximum open interest for the series lies. So closer to about 11,500 for the calls, and the maximum put open interest lies at 11,200. So that's the range which is shifted lower. Remember, earlier on it was 11,800, which had the maximum amount of call open interest on the upside. You should look at the change for intraday, the open interest options change. And you'll see that 11,300, that's the center point of all the action in today's session. Among specific stocks then, and to quickly highlight where there are a few longs being built, so the stock like Axis Bank is seeing fresh open interest change on the upside, 2.8%, though the stock's actually pretty flat, just at 609 right now. Bank of Baroda, after that steep cut in yesterday's session, one of the biggest falls that we've seen on intraday basis for Bank of Baroda happened yesterday. The stock today seen some bit of a recovery, fresh long positions to the tune of just 1%. Biocon and GAIL are the other two stocks which are adding fresh positions on the long side. On the short side, you've got HDFC Limited, a change of 28% in open interest on the short side. Stocks giving up 1%. Reliance Infrastructure, that's the other one, and Reliance Industries also adding fresh short positions. Remember, last few days Reliance Industries particularly has been a sore spot, so one of the top losers in trade, dragging the index lower with itself. Reliance Capital sees a fresh short position and the open interest change of 10% with a price change of 6%.
All right, so there you have it. That's the markets in general at this point in time. Of course, the benchmarks are largely flattish. But we'd like to start by talking about one sector, which is, well, reaping the benefits of the fact that there has been a supply reduction in the globe. So I'm talking about APIs, or active pharmaceutical ingredients, where we've seen a little bit of a clampdown in China, and because of the fact that supply has lessened, we've seen prices across the globe shoot up. What does this mean? Is this beneficial for some of the Indian suppliers like Aarti Drugs for that matter? Well, we did have Darshan Mehta talking to the management of Aarti Drugs, Adish Patil, and began by asking about the on-ground situation in China and what the demand-supply situation means. This is what their conversation was about. Listen in.
What we have been hearing, that a lot of Chinese companies have been shifting their base from one area to another, rather they are forced to do so. And the ones which are like slightly pollution oriented industry, they are not able to restart their operations. So that has resulted into a lot of shortages in many of the raw materials. So what we have seen is, since November 2017 onwards, the prices of raw materials have been continuously increasing. Until April, the trend was really high. Since April to August, now the prices have stabilized a little. So only increases because of our currency factor and oil going up. But otherwise, now the situation is stable. But then what we are observing is there are still shortages in some of the products. So it is very product specific rather than the entire, not all the product range has suffered, but there are very few products where there is a terrible demand supply mismatch, and because of which the prices of those particular products have shot up like 30–40%. But the rest of the products, they are up only by around say 7–8% or 10%, but that is mainly on the account of oil and the depreciating rupee.
Are you exposed to any of the products wherein the price rise has been substantial?
Yes. So there are few products where we are also facing shortages on the raw material side. So of those products, the prices have shot up really high. So now we are able to pass on the prices. So even we have seen a 30–40% increase in few of the products of our from our sales. So we are able to pass on that selling price. But then obviously it will impact the demand in near future. Because in India, a lot of products are under that price ceiling for formulator guys. So if their input cost goes up, so even they are squeezed. So they are bound to push other products in the market where there are more margins. So in shorter run, till the price revisions happen in the local market, some of the demand might be affected. That is what we feel.
How much % of your revenues comes in from API manufacturing? And even in this breakup, can you tell us how much is sold out and how much is used for personal consumption for your own formulation?
Yeah, so from the consolidated around 88% is from the API and allied business. By allied I mean intermediate and the specialty chemicals, but API is the major one. Around 80-82% comes from the API business, 12% is from formulation. And as far as formulation is concerned, our formulation, out of that total API consumption, around 50% of that API is captively consumed, and rest 50% of the API is procured from outside, because there are a lot of combination drugs which we do in formulation business, and we are not manufacturing all of them.
So are you seeing any kind of bump up in demand for the balance 50% that you said, the APIs that you make, which will be impacted for China? And what is the average price increase that has come out on these drugs?
Means the products which we are manufacturing.
Yeah, the products that you are manufacturing, and there is a scarcity because of China issues.
Okay. Okay. Right. So there are few products. One in anti-inflammatory range. There are 3 products which are impacted in the antibiotic range, where we are seeing shortages. So the selling prices have gone through the roof. But then the thing is, that is because of a short supply of the intermediate or the basic raw materials. So even though the margins might have increased slightly, or also the cost have increased, but then what happens is, we won't get, we won't be able to achieve 100% of the production capacities because of this. In fact, what we are doing in few of the products, we are envisaging that those raw materials, we will have, there will be a permanent shortage, because the route of synthesis included for manufacturing of those raw materials is highly polluting. So even we are thinking of changing the ROS and slightly going with backward integration in few of our products. And we have already started one of the product for one of our major antibiotic product, which is the topmost product, ciprofloxacin. There we have already started manufacturing one of the product, cyclopropylamine, and we are thinking to further backward integrate for the similar product range.
How much of the backward integration is done for you? And also, if you can answer, how much is the company dependent on China for imports for some of your formulation?
So for formulation, imports are very, very low. As far as the formulation business is concerned, we don't really need to import any APIs from China. Most of them are available locally. So that is insulated. And as far as the API products are concerned, so as I said that 3 of antibiotic range and 1 of anti-inflammatory range, these 4 products have been affected. The selling prices have also gone through the roof, but then the amount of production which we are able to achieve has gone down. So I think that will continue for a month or so, because we are changing the ROS at the plant level. We have already started with the new process. So we are facing few teething problems as of now, but in couple of months time, everything will be smooth, and so we'll be able to achieve the 100 or 90% of the capacity utilization.
Okay, and before we end it, just wanted to ask, what's the update on the US FDA issues? Are you all totally done as far as your remediation part is concerned? When are you inviting the US FDA to come and re-inspect the plants?
Yes. So the second response for the December 17 inspection went in June end, on 30th of June, and during the same period we got EIR from US FDA, that is Establishment Inspection Report. So we went through it. A lot of positive things are also written in the report, like since November 2014 we have implemented server systems, and since then no issues have been found in chromatographic test, as well as for the non-chromatographic test we have implemented another softwares which are giving real-time data recording. So all those positive factors are also mentioned, and the 5 observations which we got in the form of Form 483 back in December, the detailed explanation of those observations is also given in that EIR. So what we have done right now with the help of our consultants also, we are reviewing our own response, which we have sent already. The final response went in June itself, which is not reviewed while the EIR was sent by FDA. So we are giving, by September end, we'll be submitting one more additional response kind of a thing, where we feel that we might missed out some of the key observations, because there can be always a misinterpretation of 483 observations, what they are trying to say and what we are interpreting it as. So EIR gives a better explanation of those observations. So final response will go in September, but I think as far as FDA is concerned, for them, June response might itself be a final response, and based on that, after review of that response, they might take some action, means either in the form of change of status or in the form of reinspection.
All right, that is the management of Aarti Drugs talking about business prospects going forward. Let's take a look at the markets before we move on further, because they seem to have, gotten into a little bit of a slide post the last time we took a check. At the lowest point of the day on the indices, 11,246 now for the Nifty, trading a good 1/3% lower. From the broader market, names like Vijaya Bank are losing heftily, so almost 6% given up there. Second day on a trot, the stock is losing steam, so not good news out there. IL&FS Transport, the intraday chart of that should be interesting, because at the start of the trading session, the stock actually opened up closer to about 4.5% on the back of getting some refunds back. The stock now at the lowest point of the day, it's consolidated in that band over the last 1 hour of trade. UCO Bank, Suvan Life, Jet Airways are some of the other names which are losing 4 to 4.5% apiece. But we've been getting you prominent voices from the JPMorgan Investor Summit that's been happening in Delhi. Time to get you one more important voice. My colleague Neeraj Shah caught up with Ravi Shankar, the Managing Director of Investment Banking, and began by asking him about the future of tech-enabled companies in the country. Let's listen in.
Entire spectrum of companies that we are seeing in the space is quite mind-boggling, right? To start with e-commerce and then ride-hailing, then you have, kind of an Uber of trucking like Blackbuck. So in each of the sub-segments, we are seeing enormously successful model emerging, as well as I think the unit economics, which was a big challenge in 2015, 2016, is kind of getting settled. Because if you see in the ecosystem earlier, there were, in each of the subsegments, there are 3 or 4 players, and all of that is kind of consolidating or the winners emerging. So all of that is leading to pretty healthy growth, both in terms of economics as well as the investor interest that's back in that we are seeing in a number of transactions that we are running.
Interesting. What does the nature of the deal making and the conversations that you are privy to between both the buyers and the sellers suggest? Are people coming in because there is a genuine belief that there is profitable growth into a lot of these tech-enabled ventures, which was hitherto probably missing because they were in a growth phase, up on the anvil for the next 4 or 5 years? I mean, how's the business momentum looking like?
Yeah, so I think people are still chasing growth, right? Because India is a very early stage of the entire growth cycle, right? Especially in the digital space. So people are just trying to find the winner, because TAM is already settled that it's going to be a big TAM market. So it's more about getting the right business to back, and once you get it right, then I think the profitability will follow. So I don't think people are getting into, whether it's going to be profitable at 2 years or 4 years. It's more about getting the right company which has got the right business model, which is going to be the winner. And in a number of these cases, winner takes all, right? Whether it's ride-hailing or even e-commerce, there's a lot of network effect that follows. So people are very focused on getting the company right rather than the profitability.
Nowhere within this large deal-making sectors that we are in, are you sensing any kind of plateauing of growth in the near term otherwise? The reason I asked this to you is because somebody that I was interviewing earlier was telling me, not from JPMorgan, but somebody I was interviewing earlier telling me that while for example, the ride-sharing space seems to be on a growth, and therefore we are moving from a B2C to a B2B model for automakers. The counter to that is that for the first time in 2018, after a number of years, some of these ride-sharing companies are seeing a plateauing of demand as well, and a plateauing of the number of cars that are on offer too. So I believe it's difficult to call it a full stop so early in their life cycle. But is there a plateauing around the corner, or do you believe these off years wherein a year of flat growth in an otherwise long trajectory would always come in?
Oh, absolutely. So if you look at, just to take example of China, right? In China, even after, I would say, 20 years of the breakneck growth, the e-commerce still grows 35%. So India has been seeing this for what, 3-4 years. So we are far away from any plateauing of growth in a secular fashion. What indeed happens is that, depending on how much funding the company has, they try to play between growth and margin. So we have seen situations, some of the companies that we work with, that they grew very fast in 1 year, 60%, but the next year they will taper down the growth to less than 30%, but improve the unit economics because they want to reduce the burn as they go to the next fundraise cycle, because they want to kind of play between the two to get the best valuation. So I think those kind of play between growth and margin will take place, but otherwise it's absolutely a growth in very early stage, and is far from a plateauing that we'll see.
Okay. I want to draw the conversation to what is also important from a listed perspective, and that is Indian tech. Now, tech-enabled and the basic tech, I mean, the services companies, how are those shaping up to your mind? Because until about 2 years ago, there were obituaries written for Indian IT in particular. They will not be able to scale up. They will not be able to match what global companies are doing. Somewhere in the last 12 odd months, they are trying to prove everybody wrong. Have they been successful to your mind?
Back in their steps. So look, I think a couple of things. One, US is in the best phase as far as demand momentum is concerned. So all the clients that we speak to, I think they are not worried about demand at all. US just had one of the best GDP growth, 4.1%, and I think that's just flowing to every subsectors which our clients kind of reach out to for business, right? So that's number one. Number two, I think Indian IT service company now is at cusp, right? So if you think about the entire transition from legacy to digital, you had a digital business now contribute to almost 30% of revenue, right? Which grows 30%, and legacy is 70% not growing at all. So in a way, it's 30 into 30 is like 9% growth, which is what they're showing right now. My sense is 30 as it becomes 35 and 40% next 2 years, this will actually go to double-digit growth. So it's just a matter of that transition where digital was a smaller portion of the business, and that took a bit of time. But as legacy becomes smaller, actually growth should become double-digit. And TCS, if you see last quarter growth, it actually showed that potential that could come up in next 12 months, right? So I think that's going to be a key driver.
This is what, 12 months out?
Yeah, I would say 12 to 18 months out.
Okay. And would this be across the sphere? Because again, drawing the same parallel, until 3 or 4 or maybe 5 years ago, the businesses used to be homogeneous.
Yeah.
Now they are no longer homogeneous.
Yes.
So would it be across the space, or do you believe this will be very, very company specific?
No, so look, I think some companies are doing better than others. They have called out the entire digital game plan much better. Of course, everybody talks about being digital, right? So if you see the tagline's totally changed from what it was just global delivery model to being a digital player, right? But if you see the, just the segment that they're focused on, I think everybody's trying to create some niche. So if you look at emphasis, they're spending a lot of time in BFSI and in the what is called RegTech, which is helping the banks and financial services deal with the regulatory compliance, etc. Hexaware went big in IMS, infrastructure management, but more on cloud side. So I think everybody will try to find a niche, but that can work for mid-cap, not for large cap. When you are $5 to $20 billion in revenue, you can't be a niche player. So you're going to do everything, but also the scale is helpful because all these digital stories have become bigger and bigger in terms of the contract size. So only the big guys can kind of execute that, and that's where their kind of opportunity lies.
Okay, so how does this piece shape up over the next, just dwelling a little bit on tech before we move on to others, how does this piece shape up over, say, 5 years? With an assumption that everybody survives, do you believe that, again, the earlier conversations used to be around large cap IT enjoying margins between 15 to 25%. Mid cap IT necessarily came in between that 10 to 20% lag because of the size having that impact on margins. Do you think that will change over the next 5 years, that there is no reason why a smaller company will not be able to grow faster and have better returns as opposed to a large cap company? Can we see that change in the IT landscape in India?
So it's already happening. So if you look at mid cap companies, all of them are growing double digits. So if you look at Hexaware, Emphasis, L&T Tech Services, L&T LTI, all of them are growing anywhere between, I would say, 12 to 15%. All the large cap are growing smaller, and that's primarily because the smaller companies didn't have the legacy kind of bearing it down, right? Just the proportion that we talked about, and I think that's the case that the growth divergence happened. But I think large cap will now catch up now that the digital become larger portion of their revenue, right? In terms of margin, I think the mid cap do not have the scale to get the G&A and sales kind of spread over a larger revenue base. So they'll tend to have lower margin compared to large cap, and that's not something that they can solve for unless the scale kind of takes care of itself.
Okay. No, but the last question on this is that the mid-sized companies will, at some point of time in the next 3-4 years, assuming that they're doing well, will become larger.
Yeah.
But they are present in a niche.
Yeah.
Do you see the capabilities building up in some of these companies that you might be closely associated with, that when they do get that size, they will be able to have offshoots into other areas which will help them be a successful larger company as opposed to remaining a successful mid-sized company?
Sure. So I think obviously if they continue to grow at higher rate than other companies like 12 to 15%, I think just the law of numbers, they will catch up to higher scale. But of course, the difference is so big right now. If you think about any of Wipro, Infosys, Tech, they are $4, $5, $6 billion plus in revenue. You have everybody else, which is somewhere around $1 billion revenue. So I think it's just that it takes time to catch up. But it doesn't mean that from a shareholder return perspective, it's not attractive investment, because that's a different concept, right? Because there you are looking at the the profitability growth, which will be much ahead of the large caps.
But large cap IT too, you believe, or large cap tech, you believe, can enter a period of double-digit growth?
I do, absolutely.
For a slightly longer period of time as well?
Yes, absolutely. I think, they have transitioned digital very well. I think the demand is not an issue. Supply is an issue. And when I say supply, what I mean is, in digital, when you execute unlike earlier legacy business, you got to interact more with the client, which means that you don't only need technical skill, but also soft skills. And that's not our great, forte, right, in our students who come out of our colleges. So I think that's what they're working on, getting the right skill set, and both technologically as well as, on the soft side. And I think that will be a key challenge, which they will try to, get over with.
Okay. You also look at telecom closely, I believe.
Yeah.
What is your observation of where we are right now and where we could be right now? A three-way race of sorts. There are murmurs about this becoming a duopoly at some point of time too. Where are you on this argument? Yeah,
look, I think if you look at this telco piece globally, right, everywhere consolidation has taken place, and typically the market ends up somewhere between 3 and 4 players. You would not find many markets, large markets, with 2 players, frankly speaking. If you look at US or European, it's basically 3 or 4 player market. I don't think it's policymakers' interest or the general market's interest to have duopoly, and I don't think they will allow it to happen in a way. From a just Vodafone idea perspective, which is what people are kind of discounting a little bit, I would say that concern arose because traditionally they did not invest as much as Bharti or Jio when they did, right, in terms of just the buying spectrum, etc. But with these 2 companies coming together, I think there's a lot of hope that these are large organizations. I mean, Aarti Drugs Group is a large organization, so is Vodafone. So they're not just going to let it go. And I think there'll be the market is large enough to take 3 players. So I think there'll absolutely be a healthy kind of industry economics coming once I think Jio has come to a level where it thinks it deserves in terms of market share.
Where is it? What is that level to your mind?
I don't know. They have said
and until then, do they keep on undercutting the others? Well,
I think in one of the analyst presentations that they said, where they said is that 50% is what we would like to have. They are right now close to 22%. But we'll see where they end up.
Okay. What happens until then, Ravi? That's my primary question. I mean, the financials of these companies are, well, for a lack of a better word, at least some of them are in a terrible shape.
Yeah.
Can business improve meaningfully at this, keeping the customer happy as well, because call drops are a routine problem?
Yeah.
Can both of these things exist simultaneously?
So look, I think if you look at, forget Jio or Bharti situation, but in any market when a new player comes and cuts the prices, the entire strategy is that it will hurt the incumbent more than the newcomer, right? But as the scale builds up, it starts hurting itself more as well. So once you have base revenue for Jio, the next price cut they're doing, they're kind of hurting themselves as well, as much as they're doing to Bharti or Vodafone Idea. So I think there will be a time when the hurt will be more than the incremental market share they get. So I think that's something they will know better. But that's where I think the inflection point will come.
So are you bullish on these businesses, or are you kind of, not from a stock perspective, but from a business perspective?
No, look, I think if India has to grow and the entire data market has to grow, telecom has to grow. So I think the TAM is not an issue, the demand is not an issue, but of course the issue is, how long will this continue and whether it's just a short-term pain. But, once the short-term pain has gone away, I think, it actually should be very healthy because there are only 3 players left and they would have find their niches and they'll grow that market, right?
Oh, there you have it. That's Rathi Shankar of JPMorgan telling us about what he expects and what are good bets at this point in time in the markets as against some other bets which may not play out so well. But with that, we'll shift focus to markets in general. At this point in time, the Nifty is currently trading at its day's low. It's below the mark of 11,225 odd, down by 50 points. Some concerns starting to build into the prices. And on that note, let's welcome in our technical experts of the day. We have Ruchit Jain of Angel Broking joining us, as well as Bhavin Mehta of Dollar Capital joining us as well. Both of you, welcome. Ruchit, let me start with you. Your view on the indices right now, considering and especially since we've seen that decline come through in the last 15-20 odd minutes.
Yeah, hi, very good afternoon. Well, in fact, if we see this entire calendar month of September, then we started itself with a corrective phase. And during last week also we had discussed on a channel that how mid caps and small cap indices had shown some divergence, some negative divergence. So clearly this is a corrective phase, and the down move in Nifty as well as the Bank Nifty index is a 5-wave impulsive down move. Usually if I see the uptrend since low of 2016, this is the first time wherein an impulsive down move has been seen. So we believe that this corrective phase would take some more time correction as well along with this price correction. So this downtrend, or we can say this corrective phase, is likely to continue going ahead. Now, as far as very short-term trading is concerned, if any short positions are there in the system, in the indexes, as of now they should continue to hold. On the lower side, 11,140 to 11,170 is the range that we are watching out for, which would be the short-term target of today or maybe tomorrow's trading session. In Bank Nifty, 26,100 to 26,150 range, where 200-day moving average on the daily chart is placed, that could be seen maybe in next 1 hour or on a Friday's trading session. So any short position should be continued to held on. In Bank Nifty around 26,100, 150, profit booking could be done on short positions.
All right, we'll have Parthiv Shah also joining us in just a few moments from now. But before that, Bhavin Mehta, quickly, if you have any calls on the index or any strategies that we can take.
Okay, few minutes back, we anticipated this particular fall to come in on index. We have seen good amount of short position getting built up on both Nifty and Bank Nifty futures. Believe that on downside there is high probability it will retest that level of 11,150 to 170 range. So recommending to sell Nifty 11,400 call, which is currently quoting in the range of 45 to 50 now, which is close to our 60 levels few hours back. With the stop loss of 75, target close to about 20, and then probably it will go to 0. Definitely even the theta loss with holiday ahead should help this particular position in favor of the trader.
All right, hold that thought, guys. Let's also bring in a fundamental voice. We have Parthiv Shah of Telecom Stockbrokers joining us on the show as well. Parthiv, well, things have worsened since the last time we spoke. What's your view on how are you reading into the markets? Would you start nibbling into those ideas that you've been on the lookout for, or would you still wait a little longer before you see a further correction?
Good afternoon, Agam. Agam, unfortunately, I think India has this problem of importing inflation. By importing inflation, I mean oil prices are boiling off late. Currency has depreciated almost 12%. Our yields are spiking. And I think it seems that at least for now, in the short to medium term, there doesn't seem to be any end in terms of all the selling that we are seeing from the FIs and FPI. And I think there's always a hope and an expectation that that money should certainly come back, because for them, especially for someone who is parking in new funds in a country like India, they are getting all the large cap stocks at least 12% cheaper with the currency depreciation. But again, the dilemma being that the sitting portfolio also gets depreciated. So that is certainly a problem right now. Talking about the domestic flows, I think of late, some feedback that I've got from retail investors who tend to see their portfolios, their SIP returns a lot. I think they are now starting to think whether it will be a good idea to have some sort of redemption now, and then once the markets are down, again come back. So I think these are not extremely positive signs in terms of the flows into the market. And without the flows, I think we know that the markets at a level and at a valuation that they are at, I think does not kind of help the cause. So what we are building in is a model where there will be at least 3 to 5% more correction in all the major indices, whether you talk of the large cap indices, mid and small cap indices. But I think some of the stocks which get more impacted with the currency, I think certainly will go down a lot more, 10 to 15% even from here. And even after that, we'll see many of the stocks still be higher than their 5-year valuation average mean. So in that case, yes, correction is evident. What we are focusing on is stocks in sectors which will have lots of benefits with the currency depreciation. Case in point being stocks related to the IT sector, pharmaceutical sector. I think not a bad idea to have a portfolio weightage of at least 30 to 40% in such stocks which will be beneficiary of the rupee depreciation.
Pharma, IT, these are the names that Parthiv's liking. We'll come down to individual stocks, Parthiv, in just a bit, but let's go across and find out what technical calls our experts have with us. Bhavin, I'm going to come to you first. You've got a buy call on Indiabulls Housing Finance. Stock's actually been extremely volatile this year. It's come off its highs of about 1377. You've got 1152 at last count for the stock. You're recommending a buy on it. Do you see a significant turnaround?
What we are looking at is basically good amount of bulk and blocks happening in this particular counter in today's trade. Anticipating good amount of reversal from current level, anticipating stock to once again retest those levels on high side close to about 1200, 1210. Stop loss should be placed around level of 1150. So currently stock on the future front quoting somewhere in this particular range should be a good buy at this particular range. And at the same time, recommending sell on HDFC, which is currently quoting at 1842, stop loss close to about 1860 and target of about 1800.
It's not every day you see a sell call on HDFC, but here you have it. But Ruchit, how about you? You also have one buy and one sell call. Can you take us through those?
Definitely, I have a buy recommendation in GAIL. Even in today's market, if we see, then this has been showing outperformance. There is a breakout from a consolidation phase which has been supported by good volumes. So if even in the falling market the stock is showing such outperformance, then I think this up move is likely to continue going ahead. One should take it from a positional perspective, keeping stop below 366, which is the swing low. For target projections are around 410. And my one sell call is a sell in Just Dial. After a long consolidation phase of about 3 months, in this week the stock prices have breached the lower end of the range. Not only the range has been broken, also the prices have, after a long period of time, has given a closing below its 200-day moving average. So certainly this is a quite negative sign for short to medium term. Just from next 3 to 4 days perspective, one can go short at current levels, keeping stop above 515, expecting target around 465.
All right. HDFC AMC, that's a stock that needs to be watched out for in intraday trade. The stock's down a massive 8%. Right from the word go, there's been no respite. Remember, we've been talking about how stretched the valuations for HDFC AMC were at the time of listing. We had targets of closer to 2,000, though it never really crossed that mark. But now, downgrades coming in post the SEBI capping the TER. So the stock, in fact, below the revised target prices of most brokerages at 1413. Parthiv, many queries also coming in from our viewers as to whether this is the right time to enter into this stock, and valuations, do they look right to you?
See, my sense is that yes, markets were were anticipating some sort of cap on the TERs by SEBI, but that move coming so soon, just around 1.5 months back, they had this discussion, and I think SEBI was certainly worried that top 5 AMCs kind of garner almost 70% of the market share of the entire 25 lakh crore kind of an AUM. So I think this move certainly kind of is a move in the right direction, especially for investors. But talking about an AMC like HDFC AMC, it is going to be extremely important to understand what is going to be their business strategy going ahead in terms of what sort of hit they're going to pass it on to their distributors, because even HDFC AMC has huge list of distributors, and whether we talk of IFAs, the bank channels. So I think last time when SEBI had kind of increased, asked them to reduce the TERs, I think at 15 basis points, a bulk of it, 70 to 100% of that was passed on to the distributors. Even going now, I think my sense is that it's a company which I think certainly will pass on a bulk of the hit to the distributors, and I think the maximum EPS downgrade that we believe that can take place with this particular move is going to be to the tune of 10 to 15%. So certainly the valuations that it was commanding right after the IPO, the same is not going to be the case now. The valuations are certainly going to get derated, but here after this correction, which I feel is a slight overreaction, because I think we should not forget the fact that they still have only 3 lakh crore worth of an AUM, and potentially I think there's a good chance that over the next 5-7 years they would be having 8 to 10 lakh crore worth of an AUM. And even after all the cost cutting and the distributors that they pass on the cost to, even if they're able to earn kind of 0.20% of the AUM as profits, which currently they're earning 0.24%, I think still it can be a huge kind of a cash generating machine. So we are not very negative from here, but yes, a staggering manner approach by in HDFC AMC won't be a bad idea.
Okay. The stock's down about 8.5% since we last spoke, so now losing a bit further. Remember, Nomura came out with a report with regards to Reliance and Nippon AMC saying that their earnings could get impacted. There could be an earnings decline year on year in FY20 to the tune of 3.2%. Reliance Nippon is down 12% in intraday trade. That's a steep cut that's come into the stock. Any case for a sell trade purely looking at the charts? Because I'm pretty sure, with this kind of a dip day, there could have been some technical triggers. To you, Bhavin?
Yeah, you are asking with respect to HDFC AMC, right?
No, I was asking you RNAM. Reliance Nippon.
Sorry?
Reliance Nippon AMC.
I'm sorry, I did not check the chart with respect to Reliance Nippon, so won't be able to comment on that particular trade.
All right, I actually want to address what's happening with the FMCG sector. If you consider the likes of Britannia and Godrej Consumer, or for that matter, something like a Jubilant Foodworks as well, we've seen that slide come and it's increased. It's come off, it's intensified, the selling pressure is also intensified. Just a few weeks ago, we were all talking about the heady valuations at which a lot of these stocks were trading at, and especially for the likes of Britannia, which have corrected quite substantially. I would say the same for Godrej Consumer. And in fact, at one point in time, Britannia was more expensive than some of those index names, such as Hindustan Unilever. Of course, ITC has historically always traded at a discount to a lot of these names. But Parthiv, if I can come back to you on this entire sector, at what point in time would you start thinking about perhaps nibbling into something like a Britannia or a Godrej Consumer, to be precise, which are under pressure even today?
Certainly, I think even after the recent falls, Britannia has fallen from levels of almost 7,000 to current 5,960 levels. And I think even after this fall, the valuations are certainly not at all cheap. Yes, the growth story is there. They're doing all the right things, venturing into the dairy segment, improving the distribution. And this company will continuously grow in terms of its earnings to the tune of at least 15 to 18% going ahead. That is the sense that we have. But I think a lot of that growth seems to be factored into this company right now. But this could time correct. I think I'm not expecting much downside from Britannia from here because it's held by strong hands, and I think there's still a lot of growth story. And there's always a buzz about an M&A. The Vadia's talking about, I think, or rather looking to kind of exit their stake. And any sort of such activity could re-rate the counter even from here. So I think Britannia, my sense is that won't be a bad idea for someone. Should not just buy at one go. In a staggering manner approach, something like an SIP in a stock like Britannia would make very, very good sense. But I think one of our favorites in terms of the FMCG buy, which one might not really debate and call it an FMCG play, would be ITC. I think at around 26 times FY20 earnings, I think ITC seems to be very compelling in terms of the valuations. And I think, yes, one might argue that the FMCG business is still scaling up. It's not as much profitable as many of its peers. But once they get the scale, I think I'm very confident that that would be a company which itself would be a cash generating powerhouse. So I think ITC would be one of our most preferred bets to play the FMCG sector.
In the cash market, one other counter which is now starting to show some amount of pressure is Info Edge. Do remember, this is an HNI favorite as well as an institutional favorite, but it has come off quite substantially from levels of well over 1650 around the mark of, well, 1450. In fact, its intraday low today was 1400. So there has been some amount of pressure there. Ruchit, can you come in on Info and, perhaps tell us about the levels that you're keeping an eye on? Because I'm seeing a lot of activity in Info Edge, even on an intraday basis. How would you deal with this counter? What would your approach be?
It's a very interesting observation on the monthly charts of Info Edge has been seen. In January 2018, the stock made a high of around 1450 when the RSI was trading around 74 levels on the monthly chart, I'm saying. And the recent high is around 1700. So we have a higher high in prices, but RSI is trading around 63. So earlier RSI was 74 and now RSI is 63, even after prices have made a higher high. So this, in technical terms, we call it as a negative divergence, and this negative divergence has been seen on the monthly chart. So certainly this is a cause of worry. I think that such divergences usually leads to a corrective phase in such stocks. So I think in near term or short to medium term, the stock prices could see further pressure coming up. On any pullback moves, 1550 now become a very strong resistance, and going ahead we could see the stock heading lower, maybe towards 1325 as well.
Okay, that's an Info Edge, but interesting to see what the entire PSU bunch is doing. That pocket was extremely active in yesterday's session post the announcement of the merger of Bank of Baroda, Vijaya Bank and Dena Bank. Dena Bank was actually locked up in upper circuit. Today though, there has been a give back. The stock's down in trade today. Vijaya Bank, second day on a trot, has seen a cut of about 6% which takes its 7-day total losses to about 14.5%. Ruchit, do you track any of these PSU banks?
Not really. Dena Bank is not in a uptrend since last many months. So probably we have not been tracking Dena Bank and Vijaya Bank. But certainly Bank of Baroda, if we see, then this gap down opening was certainly not expected, which we had seen in yesterday's trading session. Now positionally, if we see, the volumes in today's trading sessions are good, and the stock has made a low of around 108, which was also seen in the month of July 2018. So this is the one of the support that one should watch for, 108. So if there are any existing long positions or anyone has built long position in today's trading session, then one should keep a strict stop below 108. On any pullback moves, the stock won't resume its uptrend so soon, because this gap down opening which was seen in yesterday's trading session would now act as a resistance. So 127 would be a major resistance going ahead on pullback moves. So if my advice, I don't have any fresh advice on creating fresh longs over here, but if any existing longs are there, 127 should be the level where long should be exited, and 108 should be the stop loss on the existing positions.
All right. That's on some of the banks there. Parthiv, one last question before we let you go. How did you view this development in the PSU lot? Obviously, the managements believe that this is long-term progressive. This is good for the bank. It helps them in a way that capital requirements get met. Obviously, not to the full extent. They still need the government to come in and support them on the capital front. But do you see this as a positive, because the market itself has given it a thumbs down for now?
See, I think it's going to be a painful ride, at least over the next 1.5 years. One reason being, we don't have the quantum of the write-off or sort of a liability that they'll have to set aside for many of the overlaps in terms of the employees that they'll have to probably give VRS to. So I think once all of that cleanup takes place, after which probably the bank will be ready with an account in terms of what sort of capital cushioning they'll need. No doubt, Bank of Baroda itself was a turnaround story, and now with Vijaya Bank also being done reasonably well, Dena Bank is the one where all the pain lies, and probably this is kind of a bailout of Dena Bank, more of sorts, rather than kind of trying to create value for shareholders of Bank of Baroda or Vijaya Bank. So I think my sense is that it's going to take time, and it's not going to be very easy or a V-shaped sort of a recovery. So I think in the banking sector, a lot of good private sector banks have corrected. So I'm more comfortable suggesting something like a Kotak Mahindra Bank, which has corrected from 1400 odd levels, which has fantastic growth story going ahead. And again, it can have a smart M&A strategy going ahead. So I think I would prefer a private sector run bank vis-a-vis a Bank of Baroda.
Okay, Partha, we'll leave it at that. Thank you so much for joining us and taking us through the views on the markets this afternoon. But we'll slip into a short break. But before that, we spoke to Sanjeev Prasad of Kotak Institutional Equities earlier in the day. And, well, he's suggesting that investors at this point in time are more tuned to the macro movements than fundamentals. And he also spoke about a few risks in the markets at this point in time. This is what he's saying. Listen.
The risks are quite high as far as India is concerned, and they stem from two areas. One is, of course, the fact that global sentiment for EMs in general is weak and could possibly become weaker if this whole China-US trade issues continue to escalate as they have been over the last 1 or 2 days, and we don't know where it ends. And the risk is if China starts suffering to some extent, some sort of slowdown, and one way out of some of the problems that China is facing as of now is maybe weaker currency, then it's going to affect just about every other EM market at the same time. And the second one is, which is more specific to India and probably impacts India more than other emerging markets, is the whole Iran-US issue and what it could do to oil prices. So currently, if you look at our current account deficit, we are pushing 3%. And God forbid if oil goes up higher, if you see a lot of Iran oil being removed from global oil markets, not being replaced by the likes of Saudi, Russia, etc., then crude prices could go up significantly. And crude has a very perverse impact as far as India is concerned in current account BOP currency, and also on fiscal borrowing, as also on inflation, interest rates. So in general, all our macroeconomic parameters could get weakened if crude prices go up $10–15 from where we are. I'm hoping not, but unfortunately there are upside risks to crude prices at the current juncture.
Good morning, Sanjeev. Hi, this is Darshan here. It was interesting reading your note that came out recently on the not-so-curious case of the Indian rupee, where you believe that it didn't deserve the kind of attention that it's getting. Overall, what's your view on the rupee? Is the move, are we at the bottom yet? Do you see more depreciation? Your view on that?
The rupee always behaves in a very funny manner, in the sense, if you look at the last 15 years, it has typically shown periods of strength in nominal terms, which effectively means in real terms it starts getting more and more overvalued. And the moment you start seeing some sort of a global or EM sort of crisis, the rupee corrects to its fundamental level. So I think this is one of those episodes. And the last 15 years we have seen already 3 times the rupee has depreciated pretty significantly. We had the global financial crisis in 2008, then you had the Euro crisis in 2011, and then you had the taper tantrum in the middle of 2013. And this could again be I would say a mini EM crisis. So I think the rupee is just correcting to its fundamental level. If you look at any of the RER metrics, whether of the RBI or of the BIS, looks like the rupee is still maybe 3–4% overvalued. It's getting there, I think, in terms of valuation. But the risk we always run is overshoot, which can happen given the whole sentiment for EMs as of now. As I was explaining earlier, if China starts seeing some sort of a slowdown, or start depreciating the currency to support its exports, then none of the EMs currency will stand against that. A lot of other currencies will also probably go down along with the Chinese yuan. So that is something which we need to keep an eye on. And of course, if crude prices go up higher, that can again put pressure on our current account and BOP. But the view which I had on the rupee was more on the fundamental basis, RER basis. So in nominal terms, it will depreciate. So I don't think it's that much of an issue. More important, if you look at the external situation as far as India is concerned, it's in a very, very strong position as of now compared to, let's say, 5 years back. Look at external debt to GDP, that's somewhere about 20%. It's much lower than many other emerging markets. So we don't have any real challenge as far as, some sort of external crisis which we have seen in the likes of Argentina or Turkey. We are far away from that. In fact, we should not even discuss anything of that sort. Not happening in India. We are sitting on $400 billion of reserve. That's about 8 months of import. So you have a relatively comfortable position when it comes to the external situation. On the rupee, I think there's a lot of attention on it because obviously, it's after a long time that the rupee had depreciated suddenly. But remember from 2015, certainly the second half of 2015 all the way till now, rupee was pretty much in that 64 to 68 range. It should have logically depreciated every year by 2-3%. It didn't. It's just that in one fell swoop, it's depreciated like 10% over the last 2-3 months.
Sanjeev, going ahead from a market standpoint now, while taking decisions and remodeling or rejigging a portfolio, does one focus primarily on the macros, or it's the micros that take precedence? Things like the earnings performance, how individual stocks and companies are placed to lead growth over the next foreseeable future, and what should your decision be impacted by?
See, it's a very good question. Logically as an investor, you should be focused more on the second part. Just see if the fundamental of the company is, changing, either improving or declining, and whether, some of the improvement or deterioration is already factored in the stock prices. So somewhere you have to always keep on looking at the price value equation for any stock. But at this point in time, since the macro has become so, dominant in the minds of investors, that unfortunately all the focus seems to be on the macro, and in a way market is reacting to very small macro changes. So if you have some concern of rupee, suddenly the whole portfolio positioning becomes more aligned towards export stocks like an IT or pharma, etc. Nobody even cares what the valuation of these names are. Similarly, if you look at the other side, you have some of the corporate banks where things seem to be improving in terms of at least the NPL problem peaking, some resolution moving ahead, and the valuation reasonably, inexpensive. But of course, given the whole macro worries out there in the sense that, maybe rupee could appreciate more, interest rates could rise. So why, look at some of these, stocks, even though the valuation may be fairly supportive. So it depends on what time frame you have. In the more, shorter term, I think the focus will continue to be, unfortunately, the macro. But if you are investors willing more to, overlook some of those macro-related challenges which will come up over the next 6-9 months, there is a good time to accumulate some of the beaten down stocks, which are available at reasonably inexpensive valuations.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise? अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but पॉलिसी समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities, और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर generation की पसंद.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are not different, they are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
Hi, I'm Jatin Khimani. I'll be at Investors Carnival this year talking about the art of selling stocks. Watch me on Bloomberg Quint.
Welcome back. You're with us on Countdown. About 27 minutes left for the markets to shut at this point in time. We have seen a little bit of recovery from the benchmark indices from intraday lows. However, well, the markets are still trading in the red with the Nifty around the mark and higher than 11,200. The Sensex as well as the Bank Nifty, well, edging lower, but we have seen just a little bit of short covering towards the end of the last 5 to 10 minutes. With that, let's take a look at the European indices as well and see whether or not that particular scene has changed at this point in time. Let's take a look at something like the CAC, the DAX, or for that matter, the FTSE. And as you can see, marginally red. That's the FTSE 100 index, but the
actually,
CAC,
you know, Agam, since the last time we took a check, I think FTSE has dropped quite a bit because at the start of trade it was up 0.25%. So I think for the FTSE as well, this could probably be a sharper cut coming in there. Though the CAC and the DAX probably holding on to the gains, but for our markets, like Agam pointed out, the pain points are mainly in the mid caps as well as the small caps.
Right. Well, there you have it. That's how the markets are faring at this point in time. But with that, let's go across to Yash Upadhyay, who, as usual, has the Fab 4 stocks of the day. Yash, good afternoon. Over to you.
Good afternoon, Agam. So the first stock on my list is Sheela Foam. That one's up about 4% today after Axis Capital came out with a report initiating coverage on it. Now they have a buy rating and see a 22% upside in the counter from Friday's close. The key positives being their product expansion, especially into low price, high margin products. That is something that they are bullish on, as well as the expectation of a price cut in their key raw material, which is TDI. That could help expand their margins further. Sugar stocks, after taking a bit of a profit booking yesterday, are back in focus today. So something like a Magad Sugar, that's up about 10% on the back of a Bloomberg report suggesting that the government may be announcing a slew of measures. What's to look out for? The government may announce a minimum quota of 5 million tons of sugar exports at its meeting next week, and to incentivize exports, they would be providing subsidies to the tune of 4,500 crore rupees. JSW Steel is another stock which is in focus, up about 2% after Nomura came out with a report initiating coverage on it. They too have a buy rating and have set a target price of 464 rupees. Now they expect that the steel demand is likely to grow at a pace of about 7 to 10% over the next decade, and timely expansion and cost-effective measures would help expand their profitability. The last stock I want to highlight is Muthoot Finance. That one snapped its two-day losing streak. It's up about 3% with volumes too coming in at almost 2.3 times the 20-day average. Back to you.
All right, Yash, we leave it at that. So those are the Fab 4 stocks to watch out for in intraday trade. Time now for another market voice. Nitasha Shankar of Securities, she's joining us on the show. Nitasha, good afternoon to you. What have you made out of the current market happenings in terms of the kind of cuts we're seeing specifically in the broader markets?
So I think, like we discussed last time as well, that there are a lot of macro issues which are weighing down on the markets, especially with regards to what's happening on the rupee front, what's happening on the crude front, and what's happening in terms of the geopolitical scenario, especially related to US and China. And that has been weighing down on the markets. But we do think that this is a very good time for long-term investors to be accumulating the quality stocks in sectors such as consumption, IT, select pharma stocks, agri, rural, and especially given the fact that post the correction, the valuations too seem quite attractive. So this is a very good time to start accumulating stocks in these sectors and build out a portfolio, because the long-term trend still continues to remain quite positive for the Indian markets.
Right, Nitasha, a whole host of developments in Indian equities. Firstly, the proposed merger of the PSU banks, and secondly, the updates that we've had with respect to the AMC's industry. I'm going to take up, the matter of the PSU banks first. What do you make of it, and what would you do with something like a Bank of Baroda at this point in time? And would you change your view, if at all you did have, on something like a Vijaya Bank, or for that matter, Dena Bank?
So if you're looking at the PSU banking space, we continue to remain negative on it, largely on account of the asset quality issues that the banks still continue to face. And given the fact that despite the fact that they're trading at below book value, most of them, we don't really see that much of an upside on a fundamental basis. Coming specifically to your question on the merger of the three banks, we do think that consolidation within the sector is always bodes well for all of the banks, but in the near term, there will be issues related to consolidation, related to the asset quality, as well as higher provisioning, because both the smaller banks do have issues related to their balance sheet. So in the near to medium term, you would see a lot of pressure coming in on Bank of Baroda because of integration issues. But if you're looking at a long-term scenario, yes, of course, the consolidation does bode well for the entire sector. Having said that, we still continue to maintain a negative view on all of the PSU banks.
All right, negative view on PSU banks. I just want to take up a viewer query at this point, and we want a technical view, and I'm going to come to you, Ruchit, with this one. Jindal Stainless, what do you do with this one? The stock has seen a cut of about 29% on a year-on-year basis. What's the sense right now at a level of about 64?
See, the broader trend for the stock in this year has been negative. We have seen a low top, low bottom structure since the start of the year itself. The only good thing is that the recent low, which was around 53, 54 rupees, coincides with the 200 weekly moving average. So there is a probability of a pullback move. Not a resumption of the uptrend, but there would just be a pullback move in maybe next few days or few weeks. So look to exit on bounce back in this pullback move. 74 to 75 is where the next resistance is seen. So on bounce back around 74 to 75, you can look to exit from Jindal Stainless. In case within the metal space, if you want to reinvest or shift this amount, then from the same group, Jindal Steel seems to be a better play from a short to medium term perspective. So sell on rise Jindal Stainless and then shift that amount to Jindal Steel. I think that would be a better strategy.
Would your view probably remain the same if it was a Jindal Stainless Hisar as well? Your pick would still be in the metals pack?
Yes, certainly. I think from the metal space, Jindal Steel seems quite better than some other stocks. So in case if it's Jindal Hisar as well, the bounce back in Jindal Hisar, in case if we see it in next few weeks, that could extend around 160 to 165. So in case if anyone is holding Hisar, then continue to hold at this moment, but on bounce around 165, look to exit the stock.
Okay, well, before we take more fundamental views, I do want to address what's going on with the OMC. So let's bring up BPCL and HPCL right now. Among the few stocks which are actually standing out and advancing in today's day of trade, HPCL out there on your screen up at around 251, and BPCL is also advancing in trade. In fact, BPCL is the top gainer on the Nifty. Bhavin, I'm going to come to you on this one. Your view on both these stocks right now. How are you reading the underlying technicals here? And perhaps if you could also offer us your approach when it comes to the futures and options space. What would you do with an HPCL as well as BPCL?
Okay, coming to HPCL first, which is currently quoting somewhere in the range of 250 to 252. Believe that Brent has stabilized somewhere in the range of $78 to $80. Unless it do not move above level of 80, there is high probability that it would reverse from current level. Now, having said that, majority of oil marketing companies have witnessed sharp sell-off. We have seen good amount of shorting in all this oil marketing company over last 6 series. There was some amount of recovery or a short covering that we have seen over last couple of trading sessions. And I believe from current level, it does not make sense to go fresh short on these particular names. So unless Brent crude does not move past $80, my sense will be most of the stocks will witness some amount of pullback. For HPCL, it can move closer to level of 280. For BPCL, it can move closer to 380 levels on the upside.
Pull up an HDFC Limited and an HDFC Bank. Remember, over the last 2 trading sessions, the entire HDFC basket, be it an HDFC Life, HDFC Bank, HDFC Limited, the pressure has been building up. Their valuations have been coming off. HDFC AMC also from a level of about 1800 post-listing to a level of 1400 right now. On the technical front for HDFC Limited, HDFC Bank, both of them have breached below their 200-day moving averages. So this could be a crucial indicator to watch out for in intraday trade. So below the 200-day moving average, what does one do now, Ruchit, with an HDFC Limited or an HDFC Bank?
I think Friday's move would be quite crucial in HDFC in both the stocks, because as you said, the stock prices are closing just below their 200-day moving average. Although it's very important, the 200-day moving average we usually see as a long-term support or resistance, but given that the prices have already corrected in last 1 month, and the Nifty and the Bank Nifty both are approaching their respective support levels, so I think just 1 day's close below its 200 EMA should not be construed as a big negative, because we have already seen a price correction. So in case if we see a bounce back in Friday's trading session and the price again crosses maybe today's high in both the stocks, then that should lead to a formation of a good support base, at least a short-term support base. But just looking at today's closing below its 200 EMA, I don't think one should take a fresh trade on the negative side over here.
Okay, well, Nitasha, I'm going to come back to you. The other issue that I wanted to talk about was the latest development in the AMC space. We've seen a substantial correction for a stock like HDFC AMC, especially given the kind of subscription that the IPO had seen, that the stock had moved well above the mark of 1800. It's come off quite substantially. We're getting a lot of queries on our YouTube channel as well. Firstly, what would you do with something like an HDFC AMC? And well, in an unrelated, but in the same query, we've also had a question on Reliance Industries. If you could offer us your views on both these stocks.
So we do not have HDFC AMC under our coverage, so I can just give you a broad view that the announcements that have been made, while they're positive for the investor base, they would lead to a revenue loss for the AMCs, which is why we've seen the correction coming in on pretty much all of the AMCs today. As far as Reliance Industries is concerned, we continue to remain positive in it from a long-term perspective. The company's core business has been a cash cow for them and has actually been doing quite well, especially because of the product mix that they enjoy, because of which they've been able to enjoy better margins, refining margins as compared to any other ONC, or for that matter even globally, they've been able to enjoy one of the best margins. In addition to that, their investment on the geo front too has been yielding positive returns. So overall, we do continue to remain positive on it. We would recommend accumulating, especially with regards to the weakness that we've seen in the recent past.
Pull up a Bajaj Hindustan after a period of lull for the sugar industry, where the prices literally haven't done anything at all. You have seen a certain spurt in sugar companies. Most of them over the last few days, you pick the name up, be it Balrampur Chini, Bajaj Hindustan, Sri Renuka Sugars, any name for that matter, Mavana Sugar, all of them saw a spurt of anywhere between 20 to 30% on the back of increase in ethanol prices. Looking at the past performances, the last few days of pricing activity, Bhavin, is there a trade in sugar?
Okay, we have seen a change in trend for most of the sugar names, particularly like Balrampur Chini and Triveni Engineering. So I believe both these names should continue to do well. On upside, Balrampur should, the moment it moves above 100 level, I believe the stock should move closer to level of 140, 145. This is basically a longer term horizon view. At the same time, on short-term basis, I believe that stock will now be ranged between level of 82 to 84 on the downside to about 95 on the upside. So this is the broader range over next couple of trading sessions.
Okay, well, it's that time of the day where we get you a check of what the dealing rooms are recommending to their clients. We have Darshan Mehta and Yatin Mota joining us. Darshan, good afternoon. I'm going to start off with you. What's on your list?
Yeah, so one of the stocks that's been spoken about, at least on the long side, is Indiabulls Housing Finance. It's trading flat in trade, but the volume is decent today. Over close to 2 million shares have already been traded. What we hear from dealing room is that, the promoter circle is actively accumulating the counter. So we are watching out for Indiabulls Financial. One counter which is trading at 52-week low is Jet Airways. There is more selling pressure that is anticipated. Clearly, most of the aviation stocks are trading at 52-week low. Crude is going up, rupee is going down. So on multiple triggers, there seems to be, pressure points on Jet Airways. And finally, steel as a sector today, metal is doing well. Steel, especially steel stocks, be it a JSW Steel or even a Tata Steel. But SAIL is which is one of the stocks in which some of the HNIs are accumulated. It's already moved up on very high volumes. Almost 12 million shares have been traded. But that's been spoken about in trade today. But Yatin, what are you hearing?
Ingenious India, that is another PSU which is in focus. Dealers are recommending that, this is one stock one needs to buy at low levels on a positional basis. They also have indicated that there are domestic funds which are buying the shares at lower levels. Apart from that, we have STBT strategy. We have Dish TV, wherein the stock is down almost 3% in trade on good volumes. Dealers are recommending a STBT kind of strategy, which is sell today, buy tomorrow kind of a strategy based on the FNO trends which are there, indicating that there are short selling, building up in the counter. And sugar, that stock and that sector remains, a favorite. Balrampur Chini, HNIs are buyers even at current levels. 88 rupees is the price, 3.5% up for that one. Sugar in one of those sectors which is doing well in a relatively adverse market today.
All right, Yatin, thanks very much for that. So some action in SAIL, volumes picking up, Engineers India and Dish TV as a sell today, buy tomorrow idea coming in from the dealing rooms. Ruchit, would you second that on Dish TV?
Yes, definitely. The trend was already down for the stock, and with today's negative momentum, the prices have also breached the crucial support of 65, which were held on almost 3 to 4 times in last few months. So I think yes, at current levels, also one can look to create fresh shorts, and today's high should be the stop loss.
Tracks HDFC Standard Life.
Nitasha, anything on an HDFC Life?
Sorry?
An HDFC Life. Do you track that one?
No.
All right. Just
track ICICI Pru Life, and we are positive on that.
All right. Could you give us some levels if you do track them? And what is the projection in terms of target prices on that?
So we do see an upside of about 14 to 15% over a period of a year on the stocks. Not really a level that we look at.
Okay, that's ICICI Pru. The stock's trading under by about 3% 347 on the stock price. Anything in particular, Nitasha, that you would bet your money on, and that's probably fresh money that's going into play right now from a perspective of building a new portfolio, new stocks that you would like to invest in?
So we've been talking about all of the stocks that we've really been investing in or recommending to our clients. One of the stocks within the small cap space which looks very attractive even at current levels is Bata India. The company has been doing a lot in terms of changing the kind of styles as well as the designs that they've been offering, and in addition to that they have been trying to cut down on the cost to try and keep their margins up. So overall, even in terms of valuation, the stock is looking attractive, and that's the one that we've been recommending of late.
Okay, Nitasha, we'll let you go on that one. Thank you so much for joining us and taking us through your views this afternoon.
Thank you.
Excuse me. But we'll move on and start taking some of these closing strategies. So, Bhavin, I'm going to come back to you. Anything that you like that's popping up on your screen right now that you recommend keeping in mind Friday's trade?
Okay, so Steel Authority of India, which is currently quoting somewhere in the range of 76 level. I believe stock can do very well, looking at positive bias on this particular name. On upside, anticipating a move closer to level of 78 to 79 once again on Friday's trade. Stop loss should be around 74.
Okay, and Ruchit, how about you? Your closing strategies for the day?
Well, I would again recommend GAIL itself even for BTST. Although the earlier levels I had given it from a short-term perspective, but I think the way the stock is giving a firm closing in spite of market closing on negative, I think we should see a gap up opening in Friday's trading session. So at current levels, from a BTST perspective, definitely levels would be different. One can go along with stop below 379, expecting target around 393 on Friday.
We have a query on Kotak Mahindra Bank as well, so let's pull that up as well. It's up around 11 points today. And again, it's had a relatively volatile recent few weeks, but it's currently trading at 1226, 1227. Bhavin, if I can come to you on your view on Kotak Mahindra Bank, what would you advise the viewer to do with this particular bank at this point in time?
Okay, Kotak Mahindra Bank, which is currently quoting somewhere in the range of 1220, 1227. I think the general trend continues to remain negative. So far, we have not seen any major pullback rally or short covering kind of a sign. So while today it has been a positive day for the stock, I will still advise to exit from the stock. The moment it has broken below 1280, I believe that on downside it can move closer to level of 1180 to 1150.
Right, and the other stock that I wanted to talk about was Titan Company. Now, this is a curious one because if I look at the Bloomberg consensus, we still have a substantial amount of buys on this one. It did start the day in the red after we had one of these broking houses, CLSA, actually, well, go up and put a sell on this stock. But it's actually recovered. It's closing in the green, it seems, at this point in time. Ruchit, if I can come to you and take your view on Titan Company, what would you do and what would your approach be to this one?
Well, thanks for asking my question. This question, I was looking for it. Because in fact, if we see the daily charts from November 2017, then the stock has formed a huge head and shoulders pattern. And today the prices were trading near the lower end of the pattern. So today's close was quite important to be on the positive side. So in case the stock had not recovered these gains and recovered the losses which we had seen in the early morning trade, then I think that would have been a breach of that head and shoulders pattern which I am talking about, and that would have given a huge negative targets on the lower side. So certainly 784 or 785, which is around today's low, now becomes a very crucial support for the stock. Till that stock is trading above these levels, there is no negative bias. The trend for the stock still continues to be sideways to positive. So any long positions should continue to be held on in Titan Limited with a strict stop loss below today's low of 785.
All right, that's on Titan, so it's a whole call coming in there. On the technical front, though, like Agam highlighted, CLSA putting out a revised target on the downside to the tune of 720 on Titan. The stock's trading at 827 right now. Some gainers in trade today. You've got a Union Bank, Bank of Baroda, Future Consumer, which is holding up, a Muthoot Finance, a JSW Steel, a Torrent Pharma. In a falling market, these are some stocks which have seen a spurt in trade. Muthoot Finance there up about 3% odd. Anything on a Bank of Baroda, Future Consumer, JSW Steel, Bhavin?
Okay, we'll clearly avoid Bank of Baroda for the time being. Good amount of call writing at high levels. I guess my colleague has already pointed out the weakness in the stock. Stop loss should be closer to 125, and any rise in short term should be used to exit. Other names, any particular names that you are looking at?
Maybe a future consumer.
Okay, not tracking future consumer that closely, but I believe that stock is ranged on downside. 42 level seems like a good support for the stock. At the same time, on upside, any close above level of 52 should be very positive. So we'll recommend to buy only if it is able to close above 52-53 range.
All right, and let's perhaps address Bajaj Finance, because that's one of the top losers today. And do remember, just a few weeks ago, Bajaj Finance was hitting around about the levels of around 3,000 rupees per share. It is now at around 2,500 rupees per share. Ruchit, your approach to Bajaj Finance now, would you initiate fresh longs at these levels? What would you do with this one?
See, if I see the last uptrend in the stock, which started in the month of March 2018, the prices are quoting around 1,700. From 1,700, the stock price is rallied to 3,000, and every corrective move in this entire uptrend, the 89 EMA for the stock, the 89 EMA on the daily chart has not been breached. Now today the stock price is closing right above that 89 EMA support. So I think the stock is now trading around very crucial support levels. So a follow-up move should be there on the positive side, to take a buy positions. So I won't recommend buying it today, but definitely on Friday's trading session, if we see a follow-up moving in today's high getting crossed, which is around 2,600, then with today's low, one can definitely initiate a long positions for a pullback move.
Okay. That's the Bajaj Finance trading at 2,500 at last count. Markets are coming to a close in about 2.5 minutes. Broader market pain seems to have exaggerated towards the end of the trading session, with the Nifty as well as the Sensex seeing some further pain. Agam, what's moving in the markets in terms of the index movers?
Right, Devina, the positive perhaps is that the markets are not closing at day's lows. The negative, of course, is that they are closing in the red, with the Nifty declining by 0.4%, and it is the same for the Sensex too. And the Nifty banking index, well, the cuts are just slightly deeper, down as much as 0.6%. When it comes to the broader market indices, we're looking at a 1% cut for the small cap index, 0.8% cut for the mid cap index on the NSE. The BSE 500 index declining by around 0.5%. As you can see, save for the small cap index, all the other broader market indices are, well, moving largely in tandem with the major indices. Let's take a look at the index movers then, starting off with some of these gainers. We have Coal India as the top gainer on the Nifty right now, up 3%. It's followed by GAIL, up 2.7%. We did talk about BPCL and HPCL. BPCL is advancing around 2.6% too, and some more gains for something like a Tech Mahindra as well as the ONGC. On the losing end, we do have the Bajaj Fin Twins, in fact Bajaj Finserv, down as much as 3.3%, followed by Bharti Airtel and IndusInd Bank. Each of these counters losing 3%. Z Entertainment, Bajaj Finance, Maruti, excuse me, among others, which are also losing out in trade. What else are we tracking with respect to the broader markets?
Well, to quickly put it into perspective, Agam, we have seen the currency pressures building up into the equity markets, and it's been pretty similar in today's session as well, where the rupee started to depreciate once again, and for the indices, that's caused a bleed in the broader markets once again. So the Nifty mid-cap index, as you can see, is down by about 0.8%, and a quick few movers then to highlight them for you on the losing side. Today has been a bad day for the likes of an HDFC AMC, a Reliance Nippon AMC, HDFC AMC finally at close around 8% lower. RNAM is down about 12.5%. Other banks that carried on from losses yesterday, UCO Bank is shed in today's session, Vijaya Bank, another 8% cut from the 8% cut that we saw in yesterday's session. So closing in on the 14 to 15% cut in a matter of 2 days. RLNFS Transport is the other one, started off positive, but then ending the day on a low note. Edelweiss is now trading closer to about 240 odd levels, 248 on the stock, down 4%. Reliance Power and Dena Bank, which was a key gainer in yesterday's session, today has given back a whole lot of about closer to 4.5%. Union Bank, BOB are two gainers. So flipping the coin there, Union Bank's up about 4.5%. BOB, which was down 15-16% yesterday, is gained in today's session to 2.5%. Future Consumer consumer, Muthoot Finance, gainers, JSW Steel, Torrent Pharma and Divi's Lab from the pharma space. More safer haven names. The pharma pack itself looks a little bit more resilient. So Torrent Pharma and Divi's Lab from there seem to be holding ground in today's session. But at close for the index, the Nifty as well as the Sensex closing under by almost 0.5%.
So let's take a look at how the intraday trades actually panned out for the major indices. With the Nifty, as you can see, it's down by, this is the Nifty Bank. The Nifty is declined by around 0.4%, almost the same as the Sensex. The Nifty Bank taking a cut of around 0.6%. Want to pull up something like the advanced decline ratio on the National Stock Exchange, and that of course has changed. It did change for the worse earlier in the session. And
it was actually, the start of the trading session, as you can see, there was a gap. You did have a positive start. So that sort of held out till mid-afternoon. And then you can see a complete crossover and a complete reversal of the advances and declines. So 1:2 in favor of the declines almost.
Let's also pull up the turnovers and see whether or not there has been an increase there. The NSE F&O turnover at 20 lakhs is largely on account of the weekly expiry of the banking options concern. Tomorrow is a holiday. And well, it's not.
It's in line probably for the cash market.
When it comes to cash markets, largely in line considering we have seen so much churn over the previous few days.
The point contributors then on the index and what actually dragged it down in trade. Remember, the last few days has been the HDFC twins. No different today. So you've got HDFC Bank, HDFC Limited, both of them dragging down the index by a cumulative 24 points. ITC has dropped about another 8 odd points on the index. IndusInd Bank, and surprisingly, Reliance Industries is not on that list because it seems to be a regular feature whenever the market falls, considering the high weightage it has on the index. On the gainers, you have a Kotak Mahindra Bank, but marginal point contribution, just about 4 odd points. ICICI Bank, Coal India, Tech Mahindra, there amongst the others, were just about lending some amount of positive support to the index.
Right, there you have it. Well, with that, if we can actually go across to our technical experts and take the final closing thoughts right now. I'm going to go to Bhavin first. Bhavin, the close is at around 11,234 for the Nifty. What would you do at this point in time, and what would your view be?
Okay, I would continue. I mean, today also we have seen good amount of call writing at 11,300 strikes, so would continue to remain negative as long as we do not see any major positivity or probably a change in trend. I mean, FIs have been consistently shorting index futures. They have been reducing their net long on stock futures front. So unless this trend does not change, we will continue to remain on the technical side.
And Ruchit, how about you? Your view now that we've seen the closing with the Nifty as well as the Nifty Bank as to where they are?
So the short-term trend certainly continues to be negative, as there is a continuation of this low top, low bottom structure. But after seeing this corrective move of about 500 points in Nifty, the next support range for Nifty for Friday's trading session would be placed in around 11,150 to 11,200, and that for Bank Nifty, which we spoke at the start of the show, is placed around 26,100 to 26,150. So this would be the range where if short positions are any, they can be covered. One should not be in a hurry to create fresh longs over here, but at least one should look to book profits on short positions when the market approaches this support range.
All right, gentlemen, we'll leave it at that. Thanks very much for joining in, Ruchit as well as Bhavin. Appreciate you both taking out the time and giving and sharing your views with us with your stock ideas. Well, on that note, it's a wrap up from Agam, myself and the entire team. We've got the Bloomberg Market Wrap coming up next.